Hi everybody, this is Gary dealing with Sentiment Timing, and this is our free video report for Wednesday, March 22nd, 2017. So things are starting to shape up the way we thought they were. It does not mean if you are not a member to jump out and short this market. We just sent out an alert today, explaining what Woody sees and the one thing I'm going to reiterate here is that the first dip is going to be a buying opportunity. So yes, kill zones are coming. The one may have started already, but the first one has always been a an opportunity to buy the dip. It's the next one that's coming that's going to be crash like, and I'm not saying that this one is over by any means. It started right around when we were expecting it to. And we're going to let things play out until we see everything lining up that a low is going to be put in place. And it's going to shift gears from selling rallies to buying the dips. And the good part about being able to buy dips is that the moves to the upside are just as fierce as they are to the downside. So we're in one of those situations here. Is there more room to go to the downside? Uh, Very likely there is. But we are running into a time period where you have to be a little bit cautious because you don't want to get caught shorting at the lows right before some kind of face ripping short covering rally starts. And again, you want to be using the formula where when you're in that euphoric phase, you're looking to short. When you get into the capitulation, you're looking to buy. But these doesn't always mean that this is a crash. It means that we could have, a drop. It could look fierce. Yesterday looked fierce, but sentiment can switch very quick from euphoric to capitulation, and price action may not actually keep up with the way sentiment is moving. And that's why so many institutions rely on Woody Dorsey's market timing and research, because it's not just picking tops. It's figuring out when everybody is getting bearish on the markets, and then you want to look to buy that dip. And the thing is that he's been doing it for 40 years. So when we send out our alerts, maybe not to get too bearish, but don't be buying into the rally like we were saying last week. The market's always changing, and as much as one may be looking for a crash, it may come in a different format and just have a couple day drop, but it's not as big as we thought. That's the market. You're not going to be able to predict every aspect of it, but you can sit there and line up all your research and say this is what's anticipated, and then you adjust it. And that's really the way the professionals manage through the market, is knowing what to expect, and then from there adjusting what is taking place with price. And that's why human beings in the markets are irrational, and there's always going to be an irrational element at work. So that's both people buying the euphoria or the tops, and then seeing the market drop and not paying attention to where sentiment is, because it may have hit a very, very extreme bearish reading, and the markets didn't drop far enough for them to think that it's over. And then what happens is they short and they get squeezed out. So this is the irrational elements that we try to take advantage of to make money in the market. And the timing technicals are, that's what Woody gives us as far as when to expect these turns. And a lot of them are, they're weeks in advance, some of them are months in advance, some of them are days in advance, but they're always in advance. And then the sentiment is what shows us, how everybody is feeling, because typically the herd or the majority is going to be wrong, but it's not. That's just not the way sentiment works like that. The specific patterns that it follows, and these patterns are followed month in and month out, and Woody's one of the pioneers in, with investor sentiment, and that's why I follow him. But anyway, then we look at technicals, and we want to look for bullish or bearish divergences. Obviously, bearish divergences if it's a top, but the tops are a topping process, and then bullish divergences for the lows, and those are your V bottoms. So you have to be prepared for when these lows are coming, because if you're not, you're going to get wiped out of your short position in a very, very fast manner, because they just happen so fast. But the thing is, you also, if you look and you buying the dip too early and it's right before the kill zone, you're going to be washed out of your position as well, and you're going to miss both sides of it. So anyway, just to go through the process as far as the, how this works. So this is in November 17th. Woody had said he's looking for two different kill zone drops to happen. And what is a better way for that to take place is a move up to the 2300, 2350, and it's going to decline in 2017. So going back to November, we knew when to expect it and almost where to expect it. So then when we started getting closer to it, we started looking into February. That was the time zone. Now, did it extend a little longer? Yes, but we even went into a closer range of that. Again, this was in December that this was printed, and we were looking in February. But as we approached that, it then changed a little more, and it got into the March timeframe, and that's where we are right now. So we're keeping an eye on things. We know what's going on with sentiment. We know that sentiment was hitting extreme levels at the top, but we got a pretty good, pretty bearish sentiment reading yesterday. But again, that doesn't mean that we can't continue lower. You want to let the professional, that the pioneer of sentiment, tell you when things are going to be changing. But we had a 3% reading yesterday with the large drop. We know that the moving average on the sentiment has been moving down, even though we've been staying up here. And what it looks for is, just your shocker to the downside, and you don't want to get overly bearish, because like we've been saying, the first dip is going to be a buying opportunity, but you want to see things line up before you start buying. And if we just take a look at our regular charts, here you can see that the 15-minute chart, this is the 5-minute chart, was giving us bullish divergences, found support, and we rallied some. So if we look at a 15-minute chart, again, we were seeing some bullish divergences, and we rallied. But where it rallied was where it didn't really make a whole lot of sense, because it could have went a little bit further down to touch the moving average, but instead it rallied a little bit before that. So anyway, we don't have bullish divergences in place, so that leaves the door open for a move below these lows here. And what we want to measure, if that happens, is where sentiment, because if we start getting a series of bearish readings, what we've noticed, and I'll show you here, is that these bearish readings they don't last long, and you get the big moves to the upside. But there's some that could come in consecutive orders, and that's usually when the big drops are taking place. So we don't have the bullish divergences. That's not in place for the 60-minute chart. And if we take these out, most likely we're going to get them. We're going to keep an eye on what the sentiment is. And what we put out a note today, and he explained what he's expecting next week. And again, if you don't know what to expect heading into the week, ahead, you're running blind, and that's where most people get washed out of positions, and it gets frustrating. And but when you have somebody that has these timing indicators that's able to predict when to be expecting reversals, it makes things a little bit easier. And if you're short on the market, where the top came in and we started heading down, you just know to get less short, or start putting stops in place as we head into support areas, because we know what to expect next week. But that bounce is going to just set up the next big bounce. And again, knowing what to expect is what really gives you these opportunities to make fantastic money in the market. So with that, we have, like I said, we have we had a 3% bullish reading yesterday. So that means a lot of people were bearish on the market. That does not mean you have to go out and buy right now. What it means is just keep an eye on things. The first drop is going to be bought. We've been saying that, or Woody's been saying that for quite some time. It's the second drop that is going to be the one that catches a lot of people by surprise, and will most likely be calling for the next bear market, but that will probably be the next buying opportunity. So with that, have a great night, and until next week, good luck with your trades.